Welcome to the Six Figure Flipper Podcast, where we broadcast weekly interviews with real estate investors from around the globe to empower you on your wealth building journey ahead. Here's your host, Matty A.
Hey, welcome back, guys, to another interview on the Six Figure Flipper. I'm your host, Matty A. Looking forward to today's interview. This is actually a special episode. This is one that is going to give you guys a peek on the inside of the Six Figure Flipper community, where each and every month, in order to keep cutting edge resources, information, what's working in today's market, I bring in a guest speaker every month for all of the students, all the people inside the community. And I wanted to give you guys an insider access sneak peek of what that looks like each and every month. So this month, I brought in Jake Harris. And Jake is a mentor and a friend of mine who is really been investing at the highest level. He's actually been at the peak, he's been at the bottom and back up to the peak again. So he's one of those great success stories of making it big and then the crash hit him hard, he lost it all. And then through the mindset, the disciplines, the habits, the relationships, and the experience that he gained along that journey, he found a way to get back up there, right? And Jake is one of these individuals that is one of the smartest, brilliant minds in the real estate industry that I've ever come across. Anytime I have a conversation with him, he gets my wheels spinning, the gears are turning, and he gets me thinking, right? And he's always one step ahead. He's a very analytical guy, but also very charismatic. So you pair those two things together and it always makes for an interesting conversation. So you guys are in for a treat today. And the format of this is a live Q&A. I'll do somewhat of an interview with him to kind of get things going, give the community members an idea of who he is and his story and his journey and kind of what his space is that he plays in real estate. But also we open it up for live Q&A so they can ask all of the questions that they want to ask and they take and lead the conversation. So that's what we do in today's interview, but we talk about Jake's story of flipping over 1,000 houses, making it big, losing it big, some of the things that he's done to get into the space that he's now in, which is private equity, and he breaks down some of the different models within their business. So if you're not familiar with hedge funds or equities or REITs, you're gonna learn a little bit more about that today, but we also talk about how this dude, I think he's flipping in 22 states right now, and how you can run a remote flipping business, how you can set up your team and how you can avoid some of the pitfalls and mistakes that go along with trying to flip outside of your local market, but also how you can do this successfully. So this is a really great interview for anybody that might be going, you know what? I'm having trouble finding deals in my local market. And maybe you want to explore other markets or somewhere outside of your state altogether. This is going to be an awesome interview for you guys to really take some notes and get tactical on this. So I don't want to waste any more time and dig in on this interview. However, if you have not gone to mattaitchison.com and downloaded any of our free resources, I want to make sure you guys know that we've updated that with a few new resources for you to download. So be sure to head over to mattaitchison.com, hit on the products tab. We'll be sure to put that link in the show notes so you can check that out. But go over there and download some of those free guides, whether you're a new real estate investor, whether you're a seasoned real estate investor, and a lot in between. We've covered some cool topics, checklists, strategies, resources, and tools on that page for you. So be sure to take advantage of that. With that being said, let's dive into today's interview with Mr. Jake Harris. All right, welcome in everybody. We got a great guest today, the homie, my man, a mentor, someone who is just investing in the real estate space at the highest possible level. And I'm excited for you guys to get to know who Jake is. Jake Harris, part of Harris Bay, co-founder of Real Estate Investment Hedge Fund. And he's had quite the journey of getting to where he's at today, but he has been a part of over 1,000 real estate investment deals, 61 flips going right now. They've flipped in over 22 states. So if you hear all these people saying the market's too competitive, there's not opportunities out there, I'm going to guess that by the end of today, you're going to have a few good ideas on how you can go out and find some more properties and create opportunity in any market. But let's not waste any further ado, brother. What's up, Jake Harris?
Hey, Matty. Hey, how you doing, sir?
Hey, dude. It's good to be hanging with you today, man. It's funny, I was telling my wife today before we jumped on that every time I get to have a conversation with you, it's like we're just flowing, man. The ideas are, bouncing left and right. And you are one of the smartest real estate investment minds based on the fact that you do your research. You know what the heck you're talking about, and you are always trying to educate yourself and stay ahead of the curve. So I want to give people an idea of how you've gotten to where you're at today. So take us back real quick in how you got interested or started in real estate leading up to now where you guys are at today, doing this $200 million development deal along with many others all around the country.
Well, first, thank you. I appreciate those compliments. I think it's actually it's a series of kind of failures that led me to where I am today. I think that's the true testament to success, is that you're kind of failing forward. So that preparation, that research is because, in the past I've done things that didn't actually kind of pan out.
Wait, you're saying you failed in real estate?
I'm saying if you haven't had some failures, you're not trying hard enough.
Yep.
I don't know who it was. I was had a conversation as far as somebody talked when they were a kid. They went down the snow hill, and they told their dad at the bottom, like, I didn't fall all day, yeah, I'm so good. And his dad was like, like, obviously you're not trying hard enough if you're not pushing yourself. You're playing within your comfort zone. And so I just kind of really believe in that. If you're in your comfort zone, that can ultimately kind of kill you. I'm not saying get reckless and go, ski off of a cliff. You can progress and push your boundaries. So what kind of led me up to here is I was in the Army. Somebody gave me a book called Rich Dad, Poor Dad. And I think it's kind of, I don't know, it's kind of like I'm not to say it's a children's book, but it's kind of like your introduction into understanding it. It's just like your brain is just like, oh, whoa. And so I had interest in real estate. I wanted to get into that. Somebody referred me that book, and it was like the light bulb literally kind of went off. It was just like, I get it. And then that started what has been kind of a lifelong journey into researching, reading about, going to school for, participating in real estate deals. That's continued to roll and had different levels. So I think it's been 17 years, 15 years, something like that, 02, 03, as far as when I started doing real estate. So I don't know what year it is yet today.
Who knows what day it is, what year it is, whatever.
Whatever, yeah.
So you've obviously covered a lot of ground there, though. Probably your people are latching on to $200 million development deals, 61 flips going right now, 22 different states. Like, how do you get there? But I want to back up just real quick, because you kind of glossed over a little bit in the sense of, you've got a really cool story of overcoming adversity. And I mean, there were times where, you're sharing with me in some of our masterminds and conversations that we've had of, those dark times of how challenging real estate was back when, you moved all the way out to a state where you didn't know anybody, where you didn't have a place to live, where you were, broke down car, not figuring out how the heck you're going to get to the construction project that you're working at. Like, tell us a little bit about that, because I know everybody's going to get the gold of where you're at right now. And I just want people to understand, though, if you're just starting out in real estate and you're going up against some roadblocks and you're facing some challenging times, to one, you have a perfect story of just not giving up. But two, there's a path and there's a process to, continuing to level up as long as you keep going. So take us back a little bit real quick.
Sure. Yeah. So, as far as you referenced there, so I was 23. I'd sold a retail business. I met a real estate developer, and I told him, hey, I'm out of the Army now. I'm ready to go grab the tiger by its tail, and I want to do this real estate thing. I want to do development. And so he ultimately told me contractor. And, to me, I didn't make sense at the time, but he said, there's a contractor involved in every facet of real estate. I don't care if you're moving dirt, you're fixing a kitchen, you're building a building, a contractor is involved in that. You can learn it through school or just through experience. And so he said the guys that he's found that had the most early success had an understanding of the construction, the trades, because contractors want to make as much money as possible and take as long as they can possibly take because they're running a business as well. Like you said, I'm pretty persistent. I talked my way into a job as an estimator for a commercial construction company. I didn't have the education. I didn't have the experience, but I talked to this guy, the president of the company, and actually I told him I'd work for him for free. I said, I will work for you for free. I know I can do this position. So a little bit of that, self-confidence in my own ability that I just figured, nobody's born an astronaut. Like everybody has to learn how to do something. Michael Jordan got cut from his high school basketball team. And so you have to have that little bit of that mindset that you can do and learn anything. And so when I got into that and talked myself into this position, I walked in and I was like, I had no idea what I was doing. And this is like pre-Google, like Google didn't exist yet. So it was like, hey, do some takeoffs and do some square footage on that thing. And I'm like, what?
You didn't have YouTube or Google.
Yeah, and I was like, what do you do? And so, that some of that experience working in that commercial construction company gave me a little of a foundation to start. Then I bought a house. It's basically, I believe you just have to have some action. And so I bought a house down in Phoenix. I was actually flipping some cars. I'd go to car auctions and I'd buy cars at auction. And so I guess it was Brashas or Mannheim, one of the auction houses. And I just happened to be looking at real estate. Being up in Northern California, you couldn't, early 2000, you couldn't buy an outhouse for, less than $300,000-$400,000. And there's brand new houses being built in Phoenix for like $150,000. And I was just like, I can actually afford this. It may be a different state over. And so the money I had saved up, I bought a house. I bought a, kind of beat up. I was going to go value add. And the plan was to actually go down there on weekends, fly down there on the weekends, fix it up myself because I had a limited budget. Unfortunately, my construction job was waiting on pause and they laid me off. And so I threw some tools in a truck and drove down to Phoenix, and it's been in the mirror since. But as far as through that was a very good time in the market, 02, 03, all the way up until about 07, 08. And then the wheels kind of fell off. And Phoenix was that epicenter for the subprime meltdown, meltdown. And so I was over leveraged. I had 8, 10 properties, some were rentals, and, there was nothing I'd ever seen or experienced in my lifetime where values went down like 70%, 80%. And I was not in a financial place to be able to, carry and cover that cost. And so I literally was wiped out. I remember I was 30 years old. My goal was to be a millionaire before 30. I achieved it, rock star. And then soon after, maybe I should have amended that goal and said, maintain that status.
Yeah.
But anyway, so absolutely wiped out, over levered. I was coming to closing table, bringing 25 grand, 50 grand, 75 grand. And then ultimately I had more houses than I had money left. And the market just kept going down and down and down. So it was a real tough time. I mean, for me, I broke up with the relationship. My brothers who were there and working with me had moved out there for me, were kind of pissed off at me because I was, to be perfectly honest, I was kind of an asshole. It was just so myopically focused on this goal of flipping these houses that I wasn't living some of the other pillars of my life. I was overweight, just not living, who I truly was. So it was an introspective time for myself to look back and realize what I did well and then kind of the areas that I didn't, or I needed more education, more experience, and then just a combination of that, the other kind of pillar, the health and travel and experiences, and the other things that make up what I believe is a quality kind of life.
What were some of those big takeaways that you made early on, those mistakes that you made early on and carried forward to not make moving forward, that you see a lot of people making early on in their real estate investing journey? What can people learn from your experience?
So some of that was, and what I see a lot of early, stage investors are beginning to get into real estate is they're speculating on future value. They're looking at, this house was $250,000, 6 months ago, and then now the house is $275,000 in that neighborhood. So when they go out there and they project it, they're projecting it, being worth $300,000 when they're finished with the remodel. To me, that's ultimately gambling. You're betting on the come, and so it's you make this. You make your money when you buy. You make your money based on today's market. If you get some appreciation, that's great. You need to have some insulation, and so people are overpaying for assets. I did as well. I looked at it and it's like I bought them below market, but was I really buying them enough below market ultimately? So that's probably the number one mistake. But I also look at it as, I think first-time investors, they just need to kind of get out and do it. If you're buying it under market, you have a little bit of room to play with. Treat it also as like an education.
Right.
Treat it as, I'm going to college, and what would you pay for a degree? 20 grand, 30 grand. Well, this is an environment where you can then go make $20,000 or $30,000 and get that experience on top of it. So it's scary for first-time investors. I know that it's, but still some of it, you just kind of get out and do it. Talk to somebody that's done it. I don't know of anybody that's a real estate investor that's not willing to help other people out.
Yeah, that's such a good point. The people that want to help themselves and want to be a student, want to learn, and are willing to work hard. I mean, some of my greatest mentors, David Osborne's watching right now. He's been somebody that has made a significant impact on my investing and wealth building journey. And, someone of his stature and net worth doesn't have to stop and do that kind of stuff, but he wants to help as many people that want to help themselves. And so I think that's a great point to bring up. And I'm curious, how did you rebound from this? For those that may be hitting a roadblock right now, or maybe down in the dumps, or maybe frustrated because they're not getting the leads they want or make the money they want, how did you rebound from this moving forward?
Yeah, I mean, well, part of it was, it was, to me, I didn't really have some of those connections, those network of people. I lived a very isolated kind of life. I was very focused on my goal. And so I didn't know anybody else that was doing what I was doing. Like you said, there's actually one story that I shared with you. As kind of everything was falling down, I got back to doing some construction work, and I'd go to a bookstore. I'd go to, there's a Barnes & Noble or Borders, I think one of those still exists, but it was near my house. And I came out after reading, books and trying to learn more about how people recovered, what they kind of experienced. I got out and my truck wouldn't start. The battery was dead. And so I sat there, I was sitting in the truck, relationships over, my brothers had moved back home. And I was like, I don't know a single person in this state that I could even call to even ask for a jump or a ride. And so it was kind of like that, like,
rock bottom.
Yeah, it was just kind of like, wow. As far as, and then what that kind of launching point for me was, or at least not say launching point, I think it was a very slow and gradual progression, was Tim Ferriss's book, The 4-Hour Work Week. to me, reading that, and so a lot of people, if you haven't read the book, you think 4-hour work week, you want to just kind of be lazy and hang out on the beach. The reality is, how do you 10x some of what you're doing? So what you can do in a normal 40-hour work week is 10 times what anybody else. And so it was equivalent to a 4-hour work week, other people are doing in 40 hours. And so it was kind of a mindset shift for me of looking for that growth patterns, looking at how I could leverage every single aspect of my life. And it was a journey, and it didn't happen overnight. It progressively took years and years of building on top of building, making and moving in the right direction, and being focused on, this is where I want to go and reestablish myself. I moved back home. I moved back to California, where at least I had, some friends and some family, and I moved into my mom's spare bedroom. I was 30 years old, broke, no money. Actually, I told this the other day to somebody. I was like, I actually was praying that I had no money. Like, I was overdrawn on accounts, like they were negative. They'd already paid out bills, and so my bank accounts were negative. And I was praying that I would have no money. That was what my prayer was. And so it was, and then a combination of that, getting back to doing construction. I connected up with one of my college roommates, and, he said he worked for a family office, and he was the VP of finance. He's now their CFO. He was a developer, kind of family office, high net worth individual, and they felt like the time was right to start flipping houses. They said, hey, there's blood in the streets. There's opportunity. We know that you flipped a lot of houses. We'd like you to come in and, put together some systems. It was going to be just a few houses, and, it turned into a much, much bigger thing that's ultimately led me to where I am here today.
It's amazing, man. I love that story. And the reason I'm glad you shared it, and I appreciate that, because I think that, there is like the path to where you're at or where you want to go. There's going to be a lot of pain along the way, right? Like, I know based on what I've seen, like, rock bottom has built way more champions and successful people than someone who just got dropped or handed something through privilege, right? And those, even though they can be painful and frustrating and just outright gut-wrenching, at the end of the day, those often are the greatest launching pads to success, your next big opportunity. Like that one, hey, I'm sure it was probably really humbling to have to go back and move in with mom at 30. And that ultimately, though, was the right choice. And it led you to, that family office, which led you to a lot of the next stuff. So really cool stuff there. I want to shift gears a little bit. And for those that are watching this live right now, that are listening in live right now, be sure to post your questions for Jake. Is there anything off limits? Can I ask that first?
No, go for it.
Yeah.
If you feel bold enough to ask it, I'll answer it.
There you go. My man is an open book. And honestly, guys, this is one of the brightest real estate minds and just business minds that we have access to for, the next 38 minutes. So I would highly recommend taking advantage of it. But let's shift gears a little bit and talk about what you guys are up to today. I want people to understand how you went from, flipping some houses to, probably some people have some big goals and dreams, but maybe necessarily don't think based on where they're at right now that they can get to that level. So did you ever think that you'd be, a part of 1,000 transactions and flips, that you'd have 61 going at one time in multiple states all around the country? Like, was that part of the vision, or is that something that naturally just kind of continued to progress as you, stepped up each tier?
Yeah. So a little bit of it was working with that family office, kind of high net worth individual. He was a home builder, built a lot of houses, 10,000 homes. That experience of working with him over the course of 5 years. So I made, a lot less money because I was working for somebody else, but it gave me a bigger horizon to look at and to, kind of aspire to. Part of that also is I went back to school. I got my bachelor's degree in entrepreneurship, and then I got a finance degree in grad school in international real estate. and that was down in Miami at Florida International. And so what it did is that during that process, it was educating myself on how to play bigger. And so some of those things, like that education, like those experiences, opened my eyes to playing on a bigger platform. And some of it is with my office and the people that work for me, I come in, I want to do the hard things. I go in and I say, what's really hard? What do other people not want to do? Because what it does is it sets us apart. It makes us harder to compete with. And so that's what you kind of talked about, the remotely managing 20-something states. Like most of these properties I've never even been to, but we've developed systems utilizing our technology that allows us to play on a much bigger platform that allows us to then insulate us from competition. So, those six-figure flippers that are all in Sacramento that are chasing down those deals, we don't have to go compete with them. And that's kind of been what the leveraging point. What we do right now is we're a private equity real estate company. We have 3 buckets in which we kind of invest out of. Opportunistic, which is our flip funds. That's really a negative correlation hedge to some of our investment strategies. And so flipping, I think, always does well, but it does tremendously well in a recession. Mm-hmm. And so when we look at that and what we operate, it's a lot of manpower, a lot of labor, but ultimately what it does is it gives us the capabilities when the market tanks or drops off, we can present ourselves to a whole lot of other opportunities. Our second bucket's development. You mentioned a little bit, we got a $200 million development in downtown San Antonio. We do some other developments, condo projects in Austin, some 10-unit single-family stuff also in San Antonio. We have a few others that are coming down the pipelines soon. Those are growth, economy kind of plays. When the consumer confidence is going up, there's lack of housing or supplying residential units. Those play into effect, and you can take advantage of that growing economy. And then our final investment is a value add kind of income model. So we're buying buildings primarily in the downtown, midtown markets of secondary and tertiary cities. So San Antonio, Milwaukee, Cincinnati, Cleveland. We're looking at things just that are not being competing against some of that institutional capital. And so I think for me, it's just that focus and that goal and continue to get bigger and better and faster.
You guys have a really cool model in how you're very diversified. And like you said, through those buckets, you somewhat hedge your risk with those different models. I know for a lot of the people listening and watching this interview right now who are, let's say, flipping houses, I hear a lot of people go, hey, do I need to only flip or invest in my own market, or could I invest out of state? And so this is something I would love, with your experience and expertise, to flush this model out. And if you guys have questions, and I saw a few roll in that I'm going to be sure to pepper in here as we talk about it, be sure to post those. Let's talk about if somebody wants to invest out of market. First and foremost, where do they start? What should they be looking at? What should they be analyzing? How do they pick a market and pick a criteria in that market?
Yeah, and I guess it probably depends on where they're coming into it. As far as if they've done a couple of flips, they have a better understanding of the logistics of it. Right. That's going to be a little bit different than somebody that's looking to do their very first deal that they've ever done. There's a lot of resources out there. I know you're familiar with some of the people, Brandon Turner and Bigger Pockets, and, the resources and some of the books and David Green have been doing as far as how to manage that out-of-state investment. I think those all kind of play into it. So if you're very brand new, it's not a bad thing to work within some of these other organizations to find out somebody that's already kind of vetting them out, helping, source contractors. You're maybe going to get a lower return, but what it's going to do is give you a little bit of experience to that market. We obviously have had a little bit more experience at doing this, and so our mindset is a little bit different. We're looking initially, when we first started rolling out, we were looking at higher density metropolitan areas that had easier to find contractors, easier to find property managers, easier to find real estate agents. And then part of that's also comps. You know, when the more rural you get, the more outside of a given area, the more challenging it is to value a property. And ultimately, everything in real estate, at least from a investment standpoint, is what is that market rate of that property. You know, and that kind of drives everything. It drives what you can pay for it, what you can rent that property for, what you can spend on rehab. And so your ability to determine what is, with some level of accuracy, the valuation of that. And that's where I think a lot of appraisers are very helpful. To be perfectly honest, I think a lot of real estate agents are not very good at this. They're good at listing houses. They're good at sending you a DocuSign or, an e-sign kind of thing. And they don't know why the houses are trading at what they're trading for. So I think talking to appraisers, understanding what that value is that kind of gives you your threshold in what you can do pretty much everything. So that's the one thing I think is critical to investing out of state. The more for us, what we initially started with is we'd invest in a kind of track home neighborhoods, where there was a lot of similar comps, houses built near the same time. If Lennar or D.R. Horton or Pulte built 2,000 homes in that area, there's likely going to be some model match comparisons of that. So we look for, within the Pareto principle, kind of getting that 80% result off of that 20% effort. I'm sure, and I know for confidence, we're missing some things of nuances of these markets, being on that one side of the street versus that side of the street. And Sacramento is a really good example of that. You can have $1 million houses on one side of the street and, $200,000 houses on the other side of the street. If you're using radius searches, you're trying to do comps based on that, you go into regression analysis that like Zillow and other things are utilizing, it can totally be off. So we're looking for areas that just have some of those similarities so we can pinpoint that subdivision, that neighborhood, that builder, same, equates to that price point.
Two questions, one from Jeremy, one from Paco. Jeremy asked, what profit margins are you expecting out of your flips? I hear, various answers to this, so would love to hear yours. As well as Paco asked, if you had to begin from scratch in a new market, what would be your strategy for starting to get leads? Or I guess to expand on that question is, how are you guys finding leads in some of these other markets? What channels are those?
Yeah, so let's see. To start, what we're expecting is we target an acquisition price of 78% market value. And that kind of fluctuates given the amount of work that it needs, as well as also our confidence level in that existing market, as far as if we already have contractors, because we're using square footages to essentially estimate what our value is going to be. And so we kind of put together, and so if we projected a $20,000 remodel on that property, and you look at it and the roof's got a tarp on it and other things like that, obviously our purchase price is going to go down. Net, at the end of the day, we're trying to make about 10% per individual property. And what flipping is, and especially when you start moving at scale, it's a velocity game.
Yeah.
It's a velocity of capital. All you're trying to do is how quickly can you turn that capital over? We will go thinner on some deals if we know part of that in the research is how quickly an asset sells. So if it's a neighborhood and things are selling 10, 15 days on market going pending, we feel more confident versus, say, a market in South Carolina that just takes 120 days on average. We need to adjust that spread to overall kind of our IRR, our annualized return is ultimately going to be. Part of back to a little bit why we have some of that diversification of our investments is our mandate is we don't want to lose money. Our investors, our clients come in, they said, hey, this is part of my life savings that we're investing with you. I don't want to lose money. And so we take that. And so it's like, how do we take that mandate is, you know what, you're not going to sometimes crush it and do 20, 30% deals. You're going to play in a little bit more of a safe zone, but also make some return. As far as your question about how you find deals, we do a lot of trustee sales. So we're buying foreclosures, we're going to auctions, we source REOs, we do online auctions. Some of those markets, we're just kind of looking for a certain profile of a property. Like I said, kind of a newer built within a suburbia of whatever metropolitan that has these numbers spread. And then again, what's the days on market? Is there access to contractors? What's that kind of turn time? And so then we can submit offers online. We don't get a whole lot of stuff on MLS just because it'd be a fire hose worth of information. But I think ultimately there's 3 legs in which you can be a flipper. There's the guys that do trustee sales. That's what we do, and source our resources, the bank-owned foreclosures. Number 2 is the kind of mailers, bandit signs, knocking on doors, doing those sourcing and farming an area. And then the 3rd is the guys that are buying non-performing loans, buying portfolios of those loans and sourcing in that way. So there's kind of 3 legs to what is a flip operation at scale. If you're an individual, you're trying to do one, literally go look MLS, look at short sales, look at these online, mailers, as you, Matt, know that cost a lot of money. You got to go spend the money. There's no tried and true method that you're just like, oh, I mailed those, mailers out and I had 5 deals a month coming in, or I got 3 or 4. It's a combination of all of those things. You got to do some of the, if you're doing the mailers, you got to do the mailers, you got to door knock, you got to do signs, you got to do those other things. And so and I don't know what your number is, but some people spend $5,000, $8,000, $10,000 a month just in their marketing material to get. And so it takes them at least 1 deal a month to break even on their marketing cost. So if you're a first-time person, look at short sales, look at some of these wholesalers. That they're making some margin on it, but what it is you kind of need to get your foot in the game, start figuring out what you're doing. And some of these secondary and tertiary markets, Cleveland's and Cincinnati's and Columbus, they have just better returns. They're not as crazy as California or sometimes Phoenix and Texas.
Yep. Some of these highly competitive markets, the Midwest is a great option for that. Another question that came in was, and I think this is just, it can be applied in your local market or really in any market, but how are you guys sourcing contractors and what process are you taking them through? Because your contractor is a critical variable to this equation. They could make you and save you a lot of money, or they could cost you a lot of money and completely kill your entire deal. And this is something, obviously, with your experience, the questions to ask, you got the systems in place. So take us through that process.
Yeah, so I say the number 1 resource that we use is Thumbtack. So Thumbtack
Write that down.
Thumbtack, like that's the one. There's the other ones, the Angie List and Home Advisors, and but for us, Thumbtack, you get some reviews of those people. Also, what we do is we break them down by trades, just as kind of a principle. Giving a whole entire job, say it's at that $20,000 or $25,000 remodel to one general contractor, sounds appealing. Like it's like, oh, great, I'll just send them over there. Well, we've had, bad experiences doing that, where, now you're completely in on this one contractor. If he doesn't work out, you're screwed. He takes your money and runs, just doesn't show up to the job site anymore. You can't track him down. You're in another state, and those things have happened to us. So through that is some processes, and so we break them down into components as far as paint. Hire a painter that paints houses. That's all he does. And every contractor is going to tell you they can do more, but until they prove to us that they can actually handle that. And so we'll vet out, and sometimes it's going to take us a few painters until we get a good painter. And then what we do is then we start scaling up our operation to give him more work until, basically not to say we break them, but we find out what their capacity is. Because again, contractors are never going to say no to work. They're always going to say, I can do more, I'll do more, send me more houses. Well, you give them 3 houses, 4 houses, 5 houses, and all of a sudden quality goes down. Things are looking like crap, taking longer. Well, then you have to come back and understand, hey, we didn't trim you back. 2 houses is your capacity.
Right.
And so that's, if you're doing it at scale, so then flooring contractors tend to do that are flooring contractors, a roofer that's doing your roof. So now you've broken those down as different trades. Calling references is important. And then again, once you've done with one, you liked what they did, you liked the quality of work. But then what we found is having those other contractors, it kind of allows that they know somebody else is looking at them, like they're coming in. One of the things, we try to get an agent early on in that process who's going to be listing the house for us, and kind of pay them extra to go check up on it. Or we'll hire
your eyes on site.
Yeah, we'll hire a professional photographer, to come in, because they don't know what they're supposed to be looking for. And so they go in, and so like a painter knows what angle to take the paint photo from to make it look like it's good, like he did a good job.
Right.
Like his cutting in may suck, but he's like, oh, I angle it this way and it looks pretty good. Whereas like a digital photographer, somebody's going to come in, spend $100 and take high quality, high resolution photos. And quickly, as I scan through, I'm looking and I'm like, but what's that? What's wrong with that? Why does that look different? And that's just part of some of my experience of working through doing the work on these projects for years. Quickly, I can look through it. So it may cost you a little bit more to have somebody. You can hire inspectors, property inspectors, and say, kind of similar like a construction project, that if you're doing a new build, they can come in and check every week or every 2 weeks and say, I'm not paying you until we walk through it, look at it. We agree that this is up to the quality of standard, and then we cut you, your final payment. So those systems that have been put in place allow us to not get really taken for a ride too often.
Yep.
It's more an anomaly if something does happen. Houses get broken into. That's a challenge. Sometimes, you got to do some other things, put security systems in there. But that's a rarity. I'd say a handful out of those 1,000+ flips that I've done that we've had to do something like that.
Question that came in was, are you guys signing contracts with every contractor that includes a scope of work and a draw schedule, or how are you, one, detailing out the work that you want done, and 2, which you already kind of touched on, holding them accountable to that before releasing the funds so you don't get taken and they don't, obviously, feed you a line of BS?
Yeah. So we, typically, so you have varying degrees of contractors. Some of them at least can line item that out as far as on an invoice. I'm going to paint 2,000 square foot house. I'm going to charge you $1.50 a square foot. Here's what I'm going to provide. Here's what you're going to provide, accept the contract. And this is what we're going to do as far as kind of the payments, initial upfront, and then that stages. Then, we try to use some of those. Crazy thing is like a lot of states don't even have contractor's license.
That's crazy.
Texas, they don't have contractor's license. So if you have a truck and a hammer, you can say you're a contractor. And so when you look at that and be like, oh, I'm only hiring licensed contractors. Well, it'd be like, a lot of states out there don't even have licensed contractors. So now what are you going to do? And so that's where we've just figured out, obviously, to find that we're getting W-9s before we issue any kind of payments. That thumbtack is probably been our number one success thing, is because then you also have reviews of 38 other people said, Matt is a fantastic painter. He showed up when he said he was going to show up. He painted and did what he was going to do, as opposed to like a Craigslist, which is like playing Russian roulette with your money. Like, you don't know what you're getting. And so that's where that Thumbtack, Home Advisors, Angie's List kind of thing, they have to pay to get onto those lists. They have to pay to, bid against your job. So it just shows a little bit higher caliber of a person that's trying to vet this out as a business versus kind of some guys that are going to scam you.
Yep. No, that's a great point. Another question that rolled in was, are you guys getting inspections done on every property? What does your initial due diligence look like before? You smirked because I already know the answer to this, but for those that are going, hey, if I'm out of state, this guy is telling me he's never even seen some of these houses. How does he know he's not buying something that's burned down to the ground? Like, how do you guys ensure that what you're buying is what you're buying, and that you're incorporating in the necessary rehab to get it to the value you need it to be at?
Yeah, so we at least look at every single house. Me personally, I may not, but we will have drivers. We'll have people look at it, take photographs of it. You can tell a lot from the outside of a house just by driving by it, looking at it. Obviously, if it's vacant, you look in windows. I'm not advising people to open
hop fences, open windows that might be open.
I'm just saying, but those are some of the things that we do. But given our experience in doing trustee sales, there's a lot of times people living in these houses. And so you don't get access. You don't get inspection reports. You have to make some general assumptions on what the condition of that house is. So we do that from photos. We try to get, roof shots. Is there dry rot? Have they been, maintaining that house? If somebody's living there, we usually assume that it has some level of kitchens, bathrooms. But you know what? There's been times like there was one house, dude had sold everything, and he was cooking off a hibachi grill. Like, he had sold the outlets. Like, he had sold everything, cabinets, doors, everything. And so it looks like a beautiful house down in Elk Grove. Beautiful house. And we're like, yes, we'll crush it. And we get in, we have to go through the eviction process. We get access to it, and dude's on there making stuff on a hibachi grill with a mattress in the corner. And I was just like, unbelievable.
I was going to ask you, what were some of the, like, what are, obviously you guys have had a ton of wins. What are some of the risks that have panned out to being, risky calls and decisions?
That's part of why you buy in a margin. You have to buy within a certain level. And so some of those we've bought, and then, people stole everything. We had one where we sent the locksmith to go change the locks because we were getting the lockout and stuff. And he called us up and he's like, I can't change the locks on this house. And I was like, dude, what the hell? Like, come on. And he's like, there's no front door. They took the front door off of the house. So like, what am I locking? He's like, the windows are gone. They took the front door, so, and these are some of the things that happen. These are rarities. So that's only happened a few times. We kind of talk about that. And so what we look at it is an overall kind of a portfolio. There's going to be times we've bought houses that have had the insides burnt out. We've had houses that people have stripped and taken all of the thing. That's kind of the risk that you get in as far as the trustee sale. I'm not saying that that's what you should do if you're a first-time buyer. That's why MLS, short sales, things that you can expect, things that you can do an inspection report on are very crucial for when you're first starting out. But what we're looking is, and so like you said, we have 61 houses in inventory right now. There's going to be some of those houses that perform better than we expected. There's going to be some of those houses that perform worse than we are projecting.
Right.
The vast majority of them are going to perform as expected. But when you look at that as an overall portfolio, we're going to regress to the mean. And so we're going to net about that 10% per deal. 11, 12% is what we've been doing right now. And, where those do 20% and those do 5% or 0, or you lose money on a house. We've lost money on houses. And some of it's, hey, let's just get out of this. It's dead money. Stop throwing, good money at a bad thing. Just get out of it and move on to the next one where we're going to, hey, We lost $5,000 there. But did we recycle that money, that velocity, and did we make $25,000 on that next flip?
Yep.
So it averaged out, and so then we made, $7,000, or $12,000, combined between the two of them.
So a question that rolled in, Stephen asked, what won't you touch with a 10-foot pole? So let's say you get wind of something that you do not like. What is that would say, nope, we're not buying this house?
It's continued to evolve over time. So one of the things that I found in Texas is there's failed foundations. Like houses fall down. They're 6 inches difference about them. So we've started vetting out that process a lot more. If that were in California, you had a failed foundation, that would be a significant cost reduction that I don't know that you could recover. In Texas, because it's such a common thing, you just put in some piers, you jack it back out, you level the house, it's no big deal there. So that was one of the things that I think that previously that scared me. I was like, oh my gosh, so what do you mean the foundation? So that our level of due diligence improved, looking for certain cracks, looking for some of those foundation issues. The age of the house is one of the big drivers with not being familiar with our contractors if we're coming into a new market. The older houses are cans of worms, as far as, so you don't ultimately know what you're getting into. I'm not saying that we don't do some of those old houses. That's kind of been my specialty, but you kind of have to research it a little bit more. You have to go a higher level. It's hard to then off of the internet say, wow, look, this house was built in 1923. I'm only going to put 30 grand into it, where you might have to go in and put 130 grand. Did you buy it at a cheap enough price to make that happen? Those are the levels that it's hard to do remotely without getting eyes on.
Yeah, it's funny. One of the questions, that my wife asked me when I tell her I'm going to look at a house today, she's like, do you like it? And I'm like, well, I like every house at the right price. It's all about price, right? But I agree with what you're saying. Particular houses require different things. And based on that level of rehab or renovation or redevelopment that you're talking about, you really want to incorporate that into your due diligence process and understand what you're getting in there. In regards to, historical homes, is there anything that you guys keep an eye on in regards to that side of it, being that the city plays a role in that?
Yeah, so that's, something you kind of need to research as far as your due diligence. Sometimes there's historic districts, overlays that are going to slow your process down. San Antonio is a city that has a lot of historical presence to it. And so you have the Office of Historical Preservation, you have the Historical Design Review Committee. Those only meet, once a month, and you have to get on the agenda a certain time before that. You can't change certain facade colors or modifications without their approval. And so again, just knowing that is not that you can't do those deals. It's just you have to understand, hey, this is going to take me a lot longer versus, we're targeting, 90, 120 days on most of our flips. From the day we buy it to the day we exit, sell it, and close the escrow, we're gone with it. A historic home's not going to be one of those. And so with that velocity of money is we're looking for some of those that, again, that Pareto principle, the quick, fast, money. We'll take a lower return, but we're going to be in and out of it in that 90, 120 days. Then because we got to turn that 3-4 times in a given year. Those historic homes, that's when we're looking at it as, okay, maybe this is a 6-month or a year process. What does that justify? So we're not targeting 78% of market value. We're maybe looking at it as a value added. We need to buy it at 60 cents, or something like that. So our annualized return then gets in that 20, 30% return for that individual asset. But also with understanding is they require a lot more time, require a lot more management. And so if you get too many of those, it can kind of bog down your operation. And so we'll do them and we'll add a little bit of them. hey, here's one in Atlanta, here's one in Detroit, here's one there. But then that's going to consume one person because it's all the different trade elements of it. And it's a more complicated process versus the track home, paint, carpet, cleanup. Let's throw some granite in it. Let's do some new appliances, just make it nice and appealing. And that's kind of where we play, that's that balancing act of the combination. I know there's some people that's all they do is full gut, full remodel, those things, and they kill it. And they go make $100,000, $150,000, $200,000 per property. And so that's just for us to get to scale. We needed to do a lot of properties, and we can't have. And those properties require a lot more. Reliance.
Just doesn't fit your model.
Yeah, and it requires a trust level on your contractor. So like we do those locally because I know my contractors intimately. And so it's like, dude, I have no problem. Here you go. I just send him over there. He knows what I'm going to expect. And we're going to make it right. If it's doing an addition or adding a foundation or doing new walls, it's easier. Remotely managing that process is much more challenging.
Good stuff. All right. So we're coming up to the end of the interview, and I want to ask, because you and I have gone back and forth on this over the last, we've been talking about it for the last 18 months practically.
Sure.
And I know it's a conversation that everybody is interested in. If you're interested in real estate, you should be interested in this conversation, which is, what is your take on the current market we're in, and what does the opportunity look like, or how do you take advantage of the current market we're in? As well as where do you see, what's your crystal ball, where do you see the market going over the next 2-3 years?
Sure. So here, let me shine up my crystal ball there. I spend a lot of time on this, and you and I have had some conversations about this. There's actually a good book I told you about, the Ray Dalio principles, that I think for me was very enlightening as far as understanding, looking at the market, not just in my lifetime, but then kind of historically over the course. And so it's been a process. I think I'm looking at my bookshelf over there. I'm about 10, 15 books into what my study is on that, but I took an overall study of every single cycle in the United States since the start of the country, since Jamestown, and what drove those cycles up and down. And ultimately what it was is, this is a very concentrated kind of version of it, is when there's an oversupply of easy money leads to an oversupply of inventory that causes the market to correct. And so given the fact that I lived through that 07, 08 crash, and it feels very, very real to me, I have like a visceral reaction to it. I'm always looking over my shoulder like, am I drinking the Kool-Aid again? Is the market, going to crash at any second? And, what I've found is, and I've used data and use analysis of that data, because data doesn't necessarily really lie, is how many potential buyers are there in a given market? What is their inventory supplies? What do those look like? And it's still challenging to get a loan. I'm not saying that this, lending standards aren't loosening up a little bit. They kind of like a pendulum. They went from, to Dodd-Frank and really, really difficult to get money, and banks are kind of hamstrung, to now they're loosening it up. And I don't think it lands in an equilibrium. It ultimately completely swings back at some point. So I think we have a few years run left on this market. I think it might be, I'd say 3 to 7 years, depending on technology. I mean, technology can speed it up or slow it down. Interest rates are a concern, but I look at this is, if people are willing to buy, and they are, their interest rates aren't as big as a concern of that for people looking to buy or rent. And the amount of residential units that we need, we're about 3.5 million units short in this country. There's not a market that I know of that is oversupplied. And so if you're not oversupplied, then how does the market fall back?
Right.
How do you correct? And I don't see any glut of inventory coming on in any market. And so that's why we're looking for certain signs that are indicators for an oversupply of the market. And so it could be 3 years, could be 5 years. But I still think there's some run left on this game.
I love it, dude. That's such a great insight from a brilliant mind right there. That's why I love talking to you, man. You're always one step ahead, and you let the data, you let the research do a lot of your decision making for you, which I can respect a lot. In regards to, from an investment perspective, right? For let's go down to the mom and pop investor.
Sure.
What are some of the things the mom and pop investor should be doing if you're saying, hey, we got 3 more years of runway, and you're saying flipping is usually the best during a time of recession? How can investors with a flipping model, or even those investors trying to go out and buy some rental properties, what should they be doing? What should they be looking at to take advantage of the current landscape, right? Not just sitting on the sidelines. How can they still stay in the game with where we're at?
Yeah, and I hear this a lot. I hear a lot of people say, well, I'm going to wait until that next downturn, and then I'll get the good deals.
Mm-hmm.
Part of it is you need experience. You need kind of that balance sheet to show that you're worth getting a loan, because guess what? When that recession does hit, loans don't exist. Debt doesn't exist. And so you need to prove out. And part of why we're doing this on a national scale is the same thing. We're vetting out this process that when we're going to go out and say, hey, Papa Bear private equity group, Blackstone, Colony, Carlisle, whoever it is, hey, we need $1 billion because we've now proved out this system in this, more difficult to flip, but we proved it out that we can do this in 25 states and, or whatever it is, the amount of markets. Here's our proof is in the pudding. Here's the actual data that shows that we've done this and managed it, and this is the returns that we've done. So don't wait to get in. Obviously, don't over leverage yourself to where, you can't wear a little bit of that loss, but experience is a very big and crucial factor. My first flips, I learned things. You'd lose money on this or something in a contract that you agreed to, and that's where, you can make some investment, and maybe your hometown's not the place you should be investing. California is a challenging market. You have a lot of foreign money, institutional capital, a lot of sharks swimming around in these waters. And so then you almost have to bet on that come. You have to bet on the market appreciating to make your value based on what you're paying for it. So, maybe it's worthwhile looking at that remote market or that the outside of your neighborhood. Maybe it's in that city in Tucson or, Salt Lake City or somewhere else that you can still get a decent enough return and build some level of experience and make a little bit of money to prepare yourself for that downturn.
Brother, it's always a pleasure kicking it with you, hanging out. We'll have to get the fams together here soon. Love that we're so close. And for those that may want to keep track of what you're up to, follow what you're up to, reach out to you on social media, what's the best place for them to do that? Yeah, so I'm on all those things. So harris-bay.com is our website. That's kind of our parent company. EssexModernCity.com is our big development site. You can find me personally on Instagram at jake.realestate. Harris-Bay on Instagram, and it kind of dovetails once you get in there. There's everything. We got some YouTube videos out there as well. And then, you can always connect up through any one of those portals. One of the most brilliant minds in real estate, Jake Harris. Always appreciate you, man. Thank you. Thanks, Maddie. All right, well, that does it for this week's interview with Jake Harris. And like I said, a little bit of a different format than the normal interview that I do. And I thought it was pretty cool hearing some of the questions that people had when it comes to flipping houses outside of their local market, right? And I'll be the first to say, I haven't flipped outside of California. I like to mine for diamonds in my own backyard. But when you're talking on a massive level and you're talking about scale, right? Like Jake is doing, this is a model that you may want to consider. Or maybe you just want to avoid your market altogether and you want to go into another market based on some of your relationships or resources that you have there. Some good insight was dropped today. So anything that he mentioned in the show itself, whether it was books or resources, anything like that, his website, all of his contact information We'll be sure to put those links in the show description below if you're watching this on YouTube, or in the show notes. You can get those at mattatchison.com for his particular episode. If you guys are not subscribed to the podcast yet, I invite you to subscribe. Subscribe on iTunes, subscribe to the YouTube channel where we're dropping the interviews each and every week in video format, as well as other real estate investing videos, tutorials, and I always love connecting with you guys. If you have any questions or comments regarding this particular episode, be sure to drop those in the YouTube channel in this section and we'll circle back for you. And last but not least, if you want to take advantage of the six-figure flipper, if you want to take advantage of the direct mail mastery, some of the courses that we have available, be sure to go to mattatchison.com and check those out. And if you have any questions on those, feel free to email support@sixfigureflipper.com and we'll be sure to get you guys answered, integrated into the community where we have people flipping all around the country, having great success. And I have a few opportunities to work with me one-on-one where I'm working with clients all around the country who are growing and scaling their real estate investing business, whether that's getting their first few properties under their belt or they're trying to take 10 to 20 to 30, and you want to know what that looks like or what that entails to coach directly with me, you can email support@sixfigureflipper.com as well. All right, guys, we got another great interview coming up for you next week. Let me know what you thought about this particular format. If you like the Q&A, and if you want to take advantage of that, by being in the Six-Figure Flipper, you get access to these top minds, these top real estate investors from all around the country each and every month. So I look forward to connecting with you. As always, thank you for taking time out of your busy day to educate yourself, to sharpen the saw, to expand your mind, to put another tool on your tool belt so you can go out there and be that much more successful in creating wealth through real estate investing. Be sure to come back next week. Until then, I'll see you guys on the flip side.